ladies and gentlemen, welcome back to another episode on this Public Investment playlist series. If you follow this channel for some time, you know the drill. Each month I turn on my camera, open up my brokerage account and I show you which stocks I'm buying. I started this back in 2022 in January, and each month I've been consistently documenting this journey. It works more like a time capsule than anything else. Please don't view this as financial advice. I do me, you do you. I'm just a random guy here on YouTube. Remember, we all have different risk profiles, we are in different situations, and just because something might make sense for me, it might necessarily be the best one for you. Having that said, take everything that I say with a grain of salt. It's always good to talk about these topics, and if you follow this playlist, you will see my portfolio. Sometimes I open it, it's up, other times it's down. Sometimes I'm investing in the best possible point, other times in the worst possible point, but it is what it is, and I'm trying to keep it consistent. I'm opening the Trading 212 app. This is not the right value of the portfolio, this is considering the cash. Trading 212 is always changing the layout, so we need to scroll down a bit. And we can see here the total portfolio value is 6,990 euros with an unrealized return of 23%. That means if I were to sell all my stocks right now, I would have this 1,169 in profit, which is not super bad. Last week, for example, the portfolio was trading way down, and in the last episode, if you watch it, you will see that stocks were tanking in the beginning of this week. Donald Trump announced that he was halting the tariffs with China for 90 days. Now the markets are rebounding. On my private portfolio, I managed to do it last week, but here for the public one, I didn't have the time to make a video. So right now I'm investing, you can argue, in a worse time, but at the same time, this is part of the DCA strategy. So each month I contribute consistently and it will all average out in the long term. You see that the strategy has been changing quite a bit in a way, because I started only with 40 euros per month. If we go back to 22 January, I invested 40 euros. Right now that money is worth 54, which is a nice return. So if I had invested all my money in the stocks I selected back then, I would be performing better than the overall thing. And this will vary quite a lot, and as I get older and hopefully my salary increase, I'll earn more money, I'll be able to contribute more. Of course, at any point in my life, I don't know if I need some kind of medical expenses, if I'm buying a house or getting married, I might need this money, but at this time I really don't need this, and I will let it compound, because at the end of the day, if I don't do anything, if it's in the bank, we're just losing purchasing power anyway. I also have my Instagram page, cadete.invest. I really don't share it a lot, but it's also a really easy way to track it. So each month I only do a post, and you can see here how the portfolio has been evolving. So we started really small, we've been increasing, and this is like a snowball going down the mountain. It gets bigger, it gets bigger. It's what they say, the first 100k are hard because you have to gain them yourself. Then it just gets the compounding, and I have other videos on this. But even if I have some highlights. So if we go back to 6th of November 2022, when I was making the video, the portfolio was negative. In January 2023 was also negative, and here other times it was different situations. At the peak was almost at 40% return. This would be really good for me if I were to retire early, but that's just the rules of the game. I keep it very consistent, very simple, and let's just jump straight to it. We'll just assess really quickly how the stocks are performing right now individually. So as always, the bulk of the portfolio is ETFs, so exchange traded funds. These are baskets of stocks. So the first ETF that comprises 25% of my portfolio is the information technology sector. These are companies like Apple, Nvidia, Microsoft. It's been performing better than the S&P 500 overall, but remember, past performance isn't indicative of future results. But I have a good risk profile or a risk appetite, and I'm still young, so I still have a long life ahead of me, and I feel comfortable doing it right now. If I were to retire maybe in 10 years, maybe I wouldn't have this approach, but everyone is a bit different. Then I have the traditional S&P 500. It's almost 19% of the portfolio. Then the more general one, this is the most diversified one, and you can see already we are over 50% of the portfolio. So I have this really strong foundation. Then I have individual stocks that when at the moment I'm investing in them, I believe them to have a perceived higher value than the overall market. So you can see here Alibaba is comprised 7%, right now it's at 42%, but in other videos it was negative. So this kind of depends. Some days are easier to make the videos, other days are harder, but if you know me, I would rather see everything in the red because we are in accumulation phase and I want to buy things cheaper. But I'll keep it constant because you also see previous episodes where I say I really think the market is overvalued, and to a certain extent it is. But then fast forward 1 year, it was still a good decision to buy it back then because it has appreciated, and otherwise if I had kept my money on the sidelines it wouldn't do me any good. But let's go down. You see here some positions are in the negative. Nike 13% down, Intel 23% down, and I even have a company here that went completely bankrupt, which was Farfetch. It's still here as a reminder. There's always risk involved, so always invest money that you can afford to lose and not to pay the bills for or money that you need to pay the bills for the next month. So let's see the pie that I have selected for this month. As usual, 20% of the ETF is going to long day of work. 20% is going for all world ETF. This is going to be a bigger contribution because here it isn't appreciated as much, and you can see here from the trend now it has rebounded quite a bit, but we're still recovering, and my entry price is lower, it's 116, but for others the difference is a bit greater. Let me see here, 23 to 30. Let's jumping a bit all over the place on this episode. I'm trying to make it fast, maybe it's not working, maybe it is, but you know this, I like to keep this very one shot, one take, and so this is giving me an annual return, average return of 12.33%, which is actually really good, but this doesn't necessarily mean that in the future I'll have this. 20% for all world ETF. This is an ETF that has over like 3,000 companies, very diverse. Then the information technology sector, we're already at 40%, and 15% for the S&P 500. I'm investing 10% on Google, because right now Google is facing a lot of pushback with the latest announcement from an Apple executive saying that they are considering delisting Google as their search engine, or at least they are registering a drop in Google searches. This has been commented by Google executives at the same time. I don't know in the future when I rewatch these videos if that will be a thing, if Google will be even a company. If Apple exists, that's very likely, but at the same time the future is very uncertain. I'm trying to make the best decisions with the information that I have right now, and I'm totally comfortable with it. JD.com, 10% is going to JD.com. 10% is going to KSPI. This is a Kazakhstan company that I mentioned in the previous episode, trying to diversify a bit of geography. 5% for Alibaba, which, fun fact, today they reported their earnings and they missed the revenue. So it's taking quite a bit, but I still like this company. I've been buying pretty much since the beginning. Nike, I'm trying to dollar cost average my price down, my entry price down, and 5% for Pinduoduo.com. If you remember, I was investing more or less around 250, 300 in the past episodes. So the last one I invested a bit more because it was a really good moment in the good timing in the market. The market was completely dropping, so I bought 400. I think on this episode I will dial down to 300 once again, just because the market is rebounding. And I will adjust a bit still each month. Let's go. 300, 300, 300, 350. Let's go. So 30 euros is going to Alphabet, 15 euros going to Alibaba, 15 to Nike, 30 to JD.com, and you see here the distribution. I'm gonna confirm. Forex fee 300. Okay. Some of the markets are not open, so not all of these will execute, but these are my positions so far. So let's give here a couple of more seconds to see if more orders will execute, and you can see here that cash 195 is still in cash because the ETFs are listed in a different stock other than the New York Stock Exchange. So right now it's a bit late, but this is when I can make the videos. It is what it is, live with it. And this is how the portfolio now is looking up. Of course, the return diminishes slightly a bit because I'm contributing right now. I didn't give much time for it to appreciate or to depreciate. Having that said, thank you all for watching. I still have a couple of vlogs to post for this time capsule, and all my plans for the next couple of months have been changed completely. I'm moving to a different location than the one I was supposed to go. So I still need to do pack, sort a lot of things, but we're keeping the series consistent, and I'll see you next time. Bye.